Johan, you worked in New York and London as a healthcare analyst. Why did you come to Switzerland?
I've always liked Switzerland, and I joined Lombard Odier in New York in 2008. And after having worked for a US firm, I liked having the European connection. And when the firm asked me if I'd consider moving to Switzerland to be closer to investors, I jumped at the opportunity. Switzerland, just like Sweden, where I grew up, is close to nature, and my wife and I think value that very much in raising our family here.
What is the difference between the Anglo-Saxon markets and the Swiss market, from your experience?
I think the biggest difference in New York, there are a lot of hedge funds, and they tend to be quite short-term focused and concentrating on catalysts that can drive the share price. So I think it's helpful to have worked in that type of environment, because for your long positions, you have to think about the short thesis and what can go wrong, and it helps you avoid blow-ups.
You run now the Swiss Small and Mid-Caps Fund of Lombard Odier. What were the most exciting moments for you as a portfolio manager of this fund?
When you're having a really good day, performance-wise. So most recently, I think back to mid-August, when Liberty announced the acquisition of Sunrise Communications, and we had a big positions. So that was a great day. Besides performance, I think we have the luxury of meeting CEOs, CFOs of big companies, hearing them speak about their strategies, and that's a real privilege to get that access.
And you were not nervous during the COVID time with the problems with the stock market and the volatility there?
No, of course, my job is to worry and see what can go wrong. And the sell-off was very sudden and sharp, but the recovery was equally sharp and sudden.
Which assets would you recommend?
Yeah, really two buckets that I like. On the one hand, structural growth stories that benefit from megatrends, and then COVID-19 beneficiaries. And so if you think sector by sector, in technology, companies that benefit from the working from home trend, in healthcare, diagnostics, contract manufacturers, in industrials, it could be companies with exposure to e-commerce, logistics, or in materials, companies that benefit from infrastructure investments like the EU Recovery Plan or EU Green Deal.
Speaking about sectors, which sector you wouldn't invest at the moment? So I'd be a little bit cautious on the sectors that will take some time to recover from the COVID-19 crisis, and companies that have weak balance sheets and a lot of debt. So a company today like Dufry looks a little bit vulnerable, but I'm also mindful of the fact if there were a COVID-19 vaccine, that's the type of stock that can bounce back quite hard. How will you perform in 2020?
Well, I hope I perform well. So far, it's been a tough year, but we've recovered nicely from the sell-off in March. So in terms of absolute performance, I think now with central banks and government providing unprecedented stimulus, I'm not so worried about much downside from here. In terms of relative performance, over the last 5 years or so that I managed the Swiss small and mid-cap strategy, we've outperformed by close to 2.8% per year, net of fees and expenses. And so we have some work into year end to catch up to that level.